Hey everyone, welcome back to Upside Down Data. Today I want to talk about whether or not Bitcoin can hold. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. But a lot of updates, better indicators, and more over there. So the line that I'm talking about Bitcoin holding is the 200-week simple moving average. So I'm recording this on Sunday, just a few hours before the weekly close. And what you can see is that Bitcoin is flirting very heavily with the 200-week simple moving average. You can see that it's just been dancing around trying to find it and be able to close above it throughout this past day. If I switch over to the hourly chart, you can really just see that, ever since, throughout this day, we rallied back up above it, and we've kind of been flirting up and down, up and down. And so the question is, can we actually get a weekly close above it? Now, why does this matter? Who cares? Well, the reason that we care is that in the past with Bitcoin, when we see it fall below or down to the 200-week moving average and then be able to close above it, that's generally been a bullish sign and a sign that a bottoming point might be starting to form. You can see this back in 2018, fell below it. Then, here it only took into the next week to close above it. And then, more or less that led into the next bull run. In March 2020, closed below it and then closed above it. And then off we went. And even if we go back all the way to 2015, here we had a few weeks where we closed consecutive weeks below it. Then when we got back above it, the bottom was in at that point. So obviously this doesn't mean that if we close here, the bottom's in. But certainly from a historical perspective, to think that the bottom could be in, you'd like to see Bitcoin start to close above the 200-week simple moving average, or be able to put in a weekly close above it, because that is the first step, at least in the past, that has been step one to kind of forming that bottom, is being able to close back above it. So this is kind of a critical level that Bitcoin is testing right now. And there are other reasons why I think this general level is important. Obviously everyone looks at the 200-week simple moving average as being kind of the far bottom support in a bear market. But there are other levels that are important to watch as well that are at a similar place but derive their meaning from a very different place than the 200-week simple moving average. And so on-chain data is another place we can look. And specifically, what I want to talk about is a long-term holder realized price. And this is basically the average cost basis of long-term holders, who are generally defined as people who have been holding their coins for more than about 155 days. Some people define it a little bit differently than others, but generally in the ballpark of 140 to 155, 160 days, that kind of general area. And what you'll note with the long-term holder realized cost base is that here, instead of it acting as support like the 200-week moving average, you'll see that in bear markets we actually tend to drop below it. But what I think is interesting to look at with this level, and it actually happens to coincide quite closely with the 200-week simple moving average. The long-term holder cost basis right now is around 20K, so just a little bit below it. The reason why this is important to watch is that cost bases are psychologically important. We've talked about prospect theory in the past, which is basically a psychological theory that says that people start to feel losses and gains more acutely when you're closer to their kind of break-even point, their middle point, which for a lot of people they would consider to be their cost basis. Where did I get in? Am I up or am I below? If you're 10K in profit, or if you're down by a factor of 10, then small moves at those points aren't going to feel all that different than anything else. You're still healthily in profit or still way down on your money. But if you're right around your cost basis, if you bought in at 20K and now price is falling from 23 back to 20, you're going to notice, though, each K that we get closer to 20K, and likewise, if we fall below 20K, you're going to feel that 1K below, 2K below, 3K below a little bit more acutely than someone who's been in painful loss ever since 60K. They're probably not going to look at 20K versus 17K as being all that different. So that's why I think this level is important to watch. And right now, we've just been dancing along it for the past number of days, right? In terms of, this is just showing closes of the price here. And we've generally speaking just been kind of dancing around it, with now us moving up a bit above. And the reason why I think it might be important for us to kind of hold above this, and especially if we can just start forming a base here, is that, long-term holders so far don't seem to have shown much of a desire to be selling at these price levels. And I'll actually show you those data in a minute where we can actually see that. But they've been relatively happy to kind of defend their cost basis. But if we start just kind of continually test this cost basis, that might test their resolve, as they're, feeling that psychological pressure every time price comes back down to, in aggregate, their cost basis. They're going to be feeling that every single time, and then maybe that's going to start breaking down on that conviction. Or especially if we break decisively below 20K, then we might get a long-term holder capitulation, which could really spark the next leg down in a bear market. So that's where I think if we can hold, the 200-week simple moving average, which is above the long-term holder realized price, it would have kind of a double significance. First, it would just be significant from a technical level that, historically, we want to close above that level off of these big capitulation type moves to start thinking that a bottom might possibly be able to start forming. But also, it would relieve some of the pressure on long-term holders, which might make them less likely to sell and more likely to hold and wait for higher prices before selling, which could hold off a long-term holder capitulation that could drag us down. And as I mentioned, just looking at long-term holders and if they've been selling, we can literally just look on chain to see have they been selling recently. So this is over the last 30 days, so the last month, just who has been selling. And so we can see this if we look at this blue checkered bars. So the dark blue bars here, this is just the distribution of realized or of cost basis of long-term holders, in the Bitcoin network. So of all the long-term holders that exist, this is what their distribution looks at like across price levels. So there's, this number of coins that are held by long-term holders who bought in the 50Ks up through 60 and above K, 40 to 50, etc. And then we can see with these little checker bars, these are the people who have been selling. So of the long-term holders who've been selling, where had they bought those coins originally? So you can see a number of the long-term holders who've been selling, a lot of them have actually been people who bought in 60, 50K range. In fact, the people really who bought in at this point and at this point who have now aged in the long-term holder cohort, they're really the ones who've been driving the selling, which is not totally surprising. They're kind of the most short-term holder-y of the long-term holders, and we know that short-term holders are more likely to be selling than long-term holders generally. And you see very little spending is happening from these really much lower price levels, very small numbers. And we can also see that a number of people, the purple bars here, the number of people who have aged into the long-term holder cost basis range. So we see a number of people come from kind of the 40K range, and a few from the 30K range have now aged in. So they decided not to sell yet. They haven't capitulated out, adding to the ranks of long-term holders. And we can see if we just compare that to short-term holders. So here I want to show the change in short-term holder supply. So the reductions. This would be the short-term holders who had sold. People who have been holding for less than 140, 155 days, however you're defining it, they're the ones who are adding into these levels. And you just see that the volume is way higher. So really, with a lot of the selling that we've been seeing kind of pushing us down, a lot of it's just been short-term holders just kind of exchanging coins, just going back and forth. They've been much more likely to be capitulating. And of the long-term holders who've been selling, more of them have been selling from these higher price ranges than these lower price ranges. And so I still see this as, generally speaking, being a lack of an overall long-term holder capitulation. That the amount of selling from long-term holders in general is relatively small, especially from what we've seen from short-term holders. And also, it's more of the kind of the people who have just been holding the bag from the top, who are long-term holders who've been selling. It's not these people from all the way back here. These people are probably the type you'd consider to be this illiquid supply, the people who are unlikely to sell very often. It'd be very concerning if those types of folks would just suddenly decide, what, screw it, I don't trust Bitcoin to stay above 10K, I'm out. And we started seeing these just bars here just shoot to the downside. That could enter or contribute a ton of selling pressure that could really bring price down. So that's what I'm watching right now. I'd really, really like to see us be able to close above the 200-week simple moving average here. So if we could do it, it would be great from a technical perspective, and it would also be a sign of strength that would then also signal relief for long-term holders who might be more likely to hold off any potential long-term holder capitulation that could spark the next leg down in a bear market. So still got a few hours to go. Who knows what's going to happen? If you're watching this in the future, you might already know what happens. Something that's going to be interesting to watch for sure. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates, better indicators, and more over there.